Morning, June 16th, 10:23. And what are we? Are we in the summer doldrums? Yeah, possibly, right? Which normally lasts Labor Day in America, which is what, September 2nd normally. But let's dig into the Forex Factory and see what's happening today. I believe today is a Fed day. Today is a Fed day. Let's have a look though. Any movement on the FX? Not really. GBP up 25 pips, 0.19%. And some GBP news. CPI coming in hot. 2.1% above the forecast, 1.8%. Let's have a look at the chart historically. And you can see during pre-COVID, it usually runs around 2 to 3%. 2% is normally a central bank target. We did have a period here. Obviously, this must have been during the Brexit, causing confusion and a pause in the economy, right? Interesting that we had a negative inflation during this period. Not in the GFC, the credit crunch. Very interesting. And that's CPI, right? That's the core price index, consumer price index, and considered the UK's most important inflation data. This is the central bank's inflation target, right? Actually, greater than forecast is good for currency. Interesting. They enjoy and actually want to stoke inflation normally, right? And the RPI, let's have a look at RPI. I believe this is the retail price index. From the Office of National Stats, changing the price of goods and services purchased by consumers for the purpose of consumption. Yeah, the stuff you buy, right? RPI differs from CPI in that it only measures goods and services bought for the purpose of consumption by the vast majority of households. Okay, and includes housing costs, which is kind of important, right? You need a roof over your head. So this is actually more accurate, kind of how it hits your pocketbook, right? And let's have a look at how the RPI has been doing over the years, right? Should be running hotter than the CPI, yeah. So we never actually, during Brexit, went negative. And it gets up to 4%. And back here, yeah, it hits 5%. So it looks like, look at this rise. We're going from basically 1.2, 1.3. We're zooming higher, right? Potentially taking out this high, right, of 4% from November 2017. We should be in a decade of at least 4 or 5 years, right, of really hot economy as things open up. Eventually, right? We've got another month delay in the UK. Chinese data, industrial production not quite meeting forecast, 9.2, came in at 8.8. Fixed asset investment year to date over a year, 15.4%. Forecast 17. This is like changes in total spend on non-real capital goods, investments such as factories, roads, power grids, and property. When was the last time a Western economy spent 15% on their actual infrastructure? Been decades, right? Been decades and decades. So that's why you've seen the great Chinese build out, the Chinese miracle over the last, I would say back end of the 1980s, really started accelerating after 1997, 1998, when China entered the World Trade Organization, right? Open up the economy, right? But those plans were being laid in the 70s, actually, 70s and 80s. So a lot of US banking money, were laying the groundwork for the opening up of China. Yeah. So here we go. USD This is the FOMC. It's a major market data. Well, Fed funds rate, that's the data metric. It's going to stay probably at unchanged, but the jawboning is important, right? It's important, and it's a market moving event. Okay, let's get out of Forex Factory. And let's peruse Yahoo Finance. Australia's minimum wage to rise 2.5%, stoking inflation as well, as the economy rebounds from COVID-19. Yeah, I mean, do you want the guy on the street to get more money in his pocket? Yeah, of course you do. Against the backdrop of what, 3, 4, 5% inflation, right? Just to keep up. But is it really keeping up? Yep, the country's independent wage setting body said reflected its strong economic recovery from the coronavirus-induced recession. The Fair Work Commission has set a rise of 1.75% for the current year, ending on June. Yeah. Oh, here we go. This is interesting. Lowest paid employees will now receive 20 Australian dollars, or approximately 15.65 US dollars. Well, I've been to Australia. That doesn't last long. 20 Australian dollars at all. Yeah, it's and that was a long time ago. Yeah. Any important notes? Yeah. Okay. US pledges more money for poorer states to cut emissions. Why? US climate envoy John Kerry pledged that Washington would give more money to help developing nations tackle climate change, as he toured the Arab Gulf and pushed major oil and gas producers to adopt cleaner energy policies, right? ESG, environmental sound, or green policies, right? That's a big push for this entire decade, right? That's, you got to be mindful of that as you allocate capital, right? Oil and gas is going to be punished and demonized. We got to clearly close the gap on finance, Kerry said Tuesday during an interview in the Saudi Arabian capital of Riyadh. Absolutely imperative. Kerry's comments come after President Joe Biden in April vowed to spend $5.7 billion annually on climate finance for less wealthy nations. He has also asked Congress to deliver $1.2 billion more to the United Nations Green Climate Fund. Okay. Under Barack Obama, the US are committed to giving $3 billion to the Green Climate Fund, which help developing nations shift from fossil fuels to clean energy. This is really hinders like developing nations to escape their economic station, right? It's kind of putting a handbrake on their economy. Okay. Yeah. So important to keep in mind, right? As you allocate, you don't want to be investing in oil and gas. It's been a bummer for the last few years, right? Used to be a core part of your portfolio, right? Having like Exxon, Shell, BP, etc., but not anymore. Okay. Gold holds near 4-week low as investors await Fed meeting. Could be a big day in gold, right? Yeah, the US Central Bank is inching towards the start of a long road to normalizing its relationship with the rest of Washington and Wall Street. Oh, really? After spending the past 15 months providing unprecedented help to the federal government and investors via trillions of dollars of bond purchases, so it could be tapering, right? This could be the day of taper talk. Will we have a taper tantrum, right? It could start preliminary discussions about scaling back that support, although actual steps in that direction are likely still months off. Bullions retreat from almost 5-month high came as investors await inflation pressures and possible response by central banks. Fed officials could project interest rate liftoff in 2023, 2 years away, but they won't signal scaling back bond purchases until August or September, according to economists surveyed by Bloomberg. Gold is treading water ahead of today's FOMC meeting with steady real yields and the dollar not providing much input at this time. Ollie Hansen, head of commodity strategy at Saxo Bank. While no change in policy is expected, Fed officials will release of a new set of policy and economic forecasts in which they could project interest rate liftoff in 2023. Okay, let's check how the Dow Jones is doing, right? Dow futures. These are all commodities, I believe. Wheat, corn, lean hogs, lumber, soybean, live cattle, and coffee. Gold up a little, $4, 0.22%. And here is Dow futures. Let's have a quick perusal. So yeah, I kind of had this potential short target. It will be triggering at this point here, right? And let's draw a daily. It doesn't seem very violent at the moment, does it? So we kind of need to, well, I'm assuming traders are looking at what is going to be said later on today. Let's do a hike in Ashy candle. So just basically sliding off. I wouldn't call it bearish, but it's under the 18-day average. And if we draw a Bollinger Band, lower Bollinger Band is currently at 33.89. Momentum is entering negative territory, and let's draw a stochastic. What is the stochastic doing? Pointing down. Yeah, not quite oversold on the K line, the red line, I believe. I think actually K is the black line, D is the red line. Let's do a quick look at the weekly. Yeah, weekly. First red candle in a long while. A solid red candle at that. You have to go back to October 26, 2020. October 26, 2020, still above the 18, obviously, but we could be in a process of testing the 18. It's been a long while since we've been down there to test it. So February 1st, 2021. Bit of a weakening on the stochastics, crossing over. Yep. And let's have a quick look at the VIX. Could be a volatile day, right? And there won't be too many volatile days if we are really entering the doldrums, right? So you kind of got to make your trades count, but not during the actual talk, right? That's when the algos kick in. It's kind of stepping up, isn't it? From here, 8, 11, 15 or so, creating floors, right? And spiking up. So, well, it always does spike up, but will the spikes get higher? And that's the question. This was COVID, so beating COVID. No, unlikely, right? Unlikely, but what? A Tesla upper Bollinger Band. That seems to happen quite often, right? Okay, let's go back to, where were we? Yahoo Finance. Let's see anything else that really catches the eye. EU approval Russia's Sputnik. That will be continuously delayed, I imagine. Okay. Let's see what these guys are saying. Tommy Wilkes. Investors wait for Fed signals on tapering, right? UK inflation shoots above Bank of England target. Dollar holds near 1 month high. World stock markets treaded water near record highs on Wednesday. Investor bullishness about the economic recovery after COVID-19 and ample stimulus from central banks and governments have propelled stocks to record highs and pushed volatility across asset classes to levels last seen before the pandemic roiled world markets in March 2020. But inflation is also rising in the United States and elsewhere. That makes the tone and content of Wednesday's readout from the Fed meeting more important for global markets. So, yeah, big day. Okay. Let's check in on zero hedge, shall we? Okay. Wuhan lab leak theory. Why is this even a controversial statement? People in charge don't tell the truth, right? Big douche is watching you. What smart investors do when institutions fail? It seems kind of interesting. Let's click on this. Things are falling. So it's important not to be continuously pessimistic because you're going to miss out on bull markets, right? But you also got to, lock in your profits from time to time. Things do change, right? So today's meeting could be a marker of like laying out the plan for high interest rates is it's going to spook the market potentially. Zero Hedge published an excellent article highlighting the hypocrisy of the mainstream media who will call that content suggesting the Wu flu may have originated from the Wuhan lab. Yeah. Fringe theory of coronavirus origins. Okay, let's get back to finance. Michael Big Short Burry. This is the greatest bubble of all time in all things by 2 orders of magnitude, and he's got a pallet of money. Okay, let's see what Michael Burry is saying. This could be interesting. Article by Tyler Durden, and I think Tyler Durden actually is the creator of this website, Zero Hedge, I believe. Earlier this year, none other than Michael Big Short Burry confirmed Bank of America's greatest fears, as he picked up on the theme of Weimar Germany and specifically its hyperinflation as the blueprint for what comes next in a lengthy tweet storm, cribbing generously from Parsons' seminal work, warning that the US government is inviting inflation with its MMT-tinged policies. Brisk debt divided by GDP. M2 increases while retail sales PMI, producer manufacturing index, I believe, stage V recovery. Trillions more stimulus and reopening to boost demand as employee and supply chain costs skyrocket. Paradigm shift. The life of the inflation in its ripening stage was a paradox which had its own mistakable characteristics. One was the great wealth, at least of those favored by the boom. Many great fortunes sprang up overnight. So he's talking about Germany here, right? The cities had an aimless and wanton youth. Those were the days, right? Prices in Germany were steady and both business and the stock market were booming. The exchange rate of the mark against the dollar and other currencies actually rose for a time. And the mark was momentarily the strongest currency in the world on inflation's eve. Side by side with the wealth were the pockets of poverty. So interesting that to kind of offset a fiat collapse of one strong currency, one major currency, all central banks kind of coordinate to print at the same time, right? So ECB, Fed, JPY, right? All the major currencies print at the same time, so they definitely talk to each other, right? Side by side with the wealth were the pockets of poverty. Greater numbers of people remained on the outside of the easy money, the quintillionaire effect, right? Those closest to the money printers get to experience the wealth effect of that newly printed money and get to spend it first, right? Looking in but not able to enter, the crime rate soared. This actually happened during the founding of America, actually, as well. The colonies, right? Because they were a British colony before 1776, no crime, no beggars. While Britain, the world's most dominant empire, plenty of poverty, plenty of beggars, right? If you ever read some of Ben Franklin's musings, you will kind of detail his experiences because he actually, I believe, lived in England for about 20 years while he was setting up the post office, I believe. Accounts of the time tell of a progressive demoralization which crept upon over the common people, compounded of their weariness with a breakneck pace to no visible purpose, and their fears from watching their own precarious positions slip while others grew so conspicuously rich. Almost any kind of business could make money. Business failures and bankruptcies became few. The boom suspended the normal process of natural selection. We haven't had natural selection in the States for a long, long time now. The bailout generation, right? By which the non-essential and ineffective otherwise would have been culled out. Speculation alone. This is kind of reminiscent of current modern times, right? Robin Hood, Wall Street bets. Speculation alone, while adding nothing to Germany's wealth, became one of its largest activities. Oh my God, here we go. The fever to join in, turning a quick mark, infected nearly all classes. Boom, boom, boom. Everyone from the elevator operator up was playing the market. Oh boy. The volumes of turnover in securities on the Berlin Bourse became so high that the financial industry could not keep up with the paperwork, and the Bourse was obliged to close several days a week to work off the backlog. Robin Hood down. Hashtag. Have they really gone down? I didn't know that. All the marks that existed in the world in the summer of 1922 were not worth enough by November of 1923 to buy a single newspaper or a tram ticket. Look at that. All of the marks in existence of summer 1922, a year and a bit later, could not even buy a newspaper. That was the spectacular part of the collapse, but most of the real loss in money wealth had been suffered much earlier. Throughout these years, the structure was quietly building itself up for the blow. Germany's inflation cycle ran not for a year, but for 9 years, representing 8 years of gestation and only 1 year of collapse. His punchline above was written in 1974, RE 1914 to 1923. Eerily similar time period 100 years later, right? Also interesting that the Fed is outlining rising rates, in 2023? And then makes the ominous extrapolation that 2010 to 2021 gestation period, here we go, adding that when dollars might as well be falling from the sky, helicopter money, management teams get creative and ultimately take more risk. Do you have Bitcoin? Paying out debt finance dividends to investors, or in current climate, stock buyback, or investing in risky growth opportunities has beaten a frugal mentality hands down. Where the savers at in the Western world, right? And as if reading from the same playbook, Paul Tudor Jones warned yesterday that things are batshit crazy. He's one of the smartest investors on the streets in New York, right? If he is in New York, he may be up in Connecticut. And if Jay Powell, the idea that inflation is transitory, to me, that one just doesn't work the way I see the world. All of which led to Burry's latest tweet warning this morning. I actually never followed Michael Burry, but interesting. Let's see what he has to say. People always ask me what is going on in the market. It is simple. Greatest speculative bubble of all time in all things by 2 orders of magnitude. 2 orders. Wow. People, okay. In other words, brace itself. So what are you going to do about it? Tudor Jones has some simple advice. Buy commodities, buy crypto, buy gold. Boom, boom, boom. That's a great article from Zero Hedge. BBC journalist chased, confronted by anti-lockdown protest. Political editor Nicholas Watt being chased down, confronted by anti-lockdown protesters outside Downing Street. Protests are once again growing after Prime Minister Boris Johnson announced yet another delay to the lifting of UK's lockdown restrictions. How long can he keep this up? As we highlighted yesterday, the public was already getting prepared for an extension to the extension before the first extension was even announced. Demonstrators are once again gathering around Downing Street and the Houses of Parliament in London to express their fury. Did I... Today at 6:24 so far. That's how it up to about 9:30. Now if we do the okay, seems like a small little crowd, not too big. Trader, one man screams in Watt's face as he desperately tried to find an exit strategy. Scum, trader, you bastard. Yeah. I haven't watched this, but yeah, that's the G7, right? Meeting. Yeah, I think it was in Cornwall, UK. As we previously highlighted, given that government advisors are pushing for lockdown restrictions to remain in place, quote, forever, such anger and potential mass civil disobedience is only to become more likely as summer progresses, as they drink their gin and tonics. Okay. Deutsche Bank nets almost $1 billion with win on its best trade since shorting subprime. Interesting. See what they did. Remember when Deutsche Bank was the butt of every investment banking liquidity joke on the street just a couple of years ago? Yeah, there was a big call for Deutsche Bank to go bankrupt, and their stock took a horrendous hammering, right? Well, thanks to Bill Huang, that ridicule has now been turned towards Credit Suisse, while at the same time, behind the scenes, Deutsche Bank has apparently been putting together some wins. Together, the investment bank is benefiting to the tune of almost $1 billion on a 35-year-old trader's bet on shipping company Zim Integrated Shipping Services, according to Bloomberg. The trade on the world's 11th largest container shipping carrier could net Deutsche its biggest win since its Big Short trade during the global financial crisis. Deutsche has been betting on bonds and bank loans of Zims and has been trading at a large discount as far back as 2016. The bank also took a small slice of equity in the name. Since then, shipping rates have skyrocketed and the investment has been such a success. It could make up about a quarter of Deutsche Bank's 2020 investment banking profit. So I guess they make about $4 billion a year in trading. Trader Mark Spen, we'll take a look at him at some point. Starting putting on a position when he joined the bank from SC Larvae. Zim was in the midst of emerging from a debt restructuring that took place in 2014. As a result, the company had less debt and had diluted its equity. Shipping rates remained depressed, making it difficult for shippers to make up ground. Let's have a look. Deutsche has started to ring the register on its trade, selling about 90 million in stock on June 4th, and it still has a stake of about 645 million after the sale. Wow. Deepak Natarajan, managing director at King Street, concluded it's important for us to monetize a decent portion of our position just because the liquidity of the equity is relatively low. They don't want to be the biggest whale in one stock. We are still relatively constructive on freight rates in the next 6 to 12 months. Cool. Belarus. Wow. China sends record 28 fighter jets towards Taiwan after telling NATO we won't sit back. Okay, they are getting aggressive regarding Taiwan, aren't they? The timing appears unmistakable. Message and warning to the West after Monday, NATO issued a communique, which for the first time ever singled out China as a central security challenge. Oh, wow. NATO is the North Atlantic Treaty Organization, kind of set up to defend against the Red Army of Russia, right? Okay. China's PLA military on Tuesday flew a record 28 fighter jets into Taiwan's air defense identification zone. Yeah, that's a direct hostile move right there, isn't it? Look at these guys. While China has, over the past months since Biden took office, flown nearly daily groups of aircraft and bombers near or in Taiwan contested airspace. This latest comes as Biden is in Europe, showing up support among allies for a tougher united front against Beijing. In March, China's military had sent a record of that time of 20 aircraft, which included 4 nuclear-capable bombers. But Tuesday's 28 aircraft marks the biggest incursion since Taiwan's defense ministry began keeping public tally of incursions. Yeah, they don't want you to keep tally. China's show of force comes after leaders of the group of 7 industrialized nations issued a statement Sunday calling for the peaceful resolution of cross Taiwan Strait issues and underscored the importance of peace and stability. This is China's response, a 2-fingered salute. So Zhao Lijian slammed the G7 to stop interfering in China's internal affairs. China's internal affairs seem to be external to me. He added China's determination to safeguard national sovereignty, security, and development interests is unwavering. Wow. This is major news, right? Okay. Okay, I think I'm going to call this video to an end. All right, guys. Thank you very much. Enjoy the day. Enjoy the summer as well, right? Peace. Bye.